Hey everyone, welcome to another video by Optionables. My name is Saket, and in today's video, as usual, we are going to cover three aspects: what happened to the markets, what we can expect from the markets tomorrow, and what happened to our trades. So there is one more important thing which I would like to tell before we continue, and that is yesterday we had sent mails for the workshop participants in Bangalore, and we have received close to 80 replies out of 130 emails we had sent. And if we do not receive the further confirmation from people, so then we will be sending the emails to the second set of people in Bangalore. So totally we have received around 450 responses totally from Bangalore itself, and if we do not receive the confirmation mail by end of today, we will be sending the invites to fresh set of people, and they can end up confirming and attending the free workshop. So quickly we will start off by looking what happened to the markets. So needless to say, today was an absolute bloodbath in Dalal Street. The market opened gap down of around 200 points closer to 16,000. But the markets didn't take support at 16,000, and immediately the sell-off continued. So the markets came towards 15,900 within few hours. There also it failed to take the support. After that, the market did consolidate at that range for some time, but there was another round of selling which took the market closer to 15,800. So from 15,800, while we expected the market to take support at 15,800, there was one more round of selling which took the market further down by 50 to 60 points, and luckily we were able to close above 15,800, which is a very crucial support for the market. So the thing is, if we look at the stock specific action, all the stocks were in red except for one in Nifty 50. So out of 50, 49 stocks were in red, and there was only one stock which mildly ended in green, so which would make no difference to the market. Looking at today's fall, it is pretty evident that FIIs would have sold in huge quantity today. So we don't know how much DIIs would have bought, but definitely one thing that is for sure is FIIs would have sold a lot. One very important thing what we have to note here is all these days, if you remember, Bank Nifty was outperforming Nifty. That means Bank Nifty did way better than how Nifty was performing. Every day we would see that Nifty would be down almost by 1%, 1.2%, whereas Bank Nifty just fell around 0.6, 0.7%. But today the scenario was totally different. So today Bank Nifty ended up falling around 3.4%, whereas Nifty only fell 2.2%. So all banking stocks were beaten down very badly today. And the thing is, ICICI and Kotak Bank, so these two have significantly higher weightage, and these two were the least hit banks. So what I mean by this is that these two were relatively the least affected by today's fall. They themselves ended up falling around 2.5 to 3%. So you can imagine what would have happened to other banks. So you can imagine what would have happened to other banks. So apart from this, if you look at the IT stocks, so IT stocks were the only sector, or IT sector was the only sector which relatively outperformed. The reason is because rupee is weakening, and that is a very positive news for the IT stocks. So one thing what we should note here is there was a huge recovery seen in IT stocks during the middle of the day. So TCS, which opened negative, also turned positive and started trading in green. But towards the end, even that was beaten down. It ended falling and ended in red. So the thing is, the trend here looks absolutely bearish. Today, out of total 2000 actively traded stocks in NSE, close to 1600 stocks were down, and mid cap, small cap, name it, everything was trading in red, and clearly the trend seems to be very bearish. And small caps are beaten down so badly that small caps, whoever had invested at its peak, will be having a very hard time now. Not just that, cryptocurrencies, you don't even have to ask. Especially these meme coins like Dogecoin or Shiba Inu, they have fallen 50% in just 5 days. They are beating these coins so badly that imagine half of the value is eroded just in 5 days. And not just that, from the peak they are almost down by 80 to 90%. So this is a huge number, to be honest. And now let's quickly discuss what we can expect from the market. So as you all know, we are holding a lot of short positions in Nifty. But there is one very important thing which I want to tell you guys, and that is we are right now expecting Nifty to bottom between 15,000 to 15,500. There are three important rationales as to why we are expecting the bottom to happen between 15,000 to 15,500. The first reason being the valuation. So all these days Nifty had a very high valuation. When you actually look at the historical valuation of Nifty, the P ratio comes to around 18 to 19. But Nifty was trading at a P ratio of almost around 23 to 24. So this is absolutely very high. But right now PE ratio of Nifty has come closer to around 20, and any say around 4 to 5% fall from here, it will put the PE ratio back in the average zone of around 18 to 19. So if Nifty actually ends up falling towards 15,000 or 15,500, that means Nifty at this level is actually fairly valued. So this is the very first reason. The second reason being, top blue chip companies are beaten down very badly and they are available at a very attractive valuation. So for example, if you look at it, HDFC Bank is almost down 30% from its peak. Bajaj Finance and Bajaj Finserv, so they are fundamentally such good companies, they are down around 35 to 40% from the peak. And you name the stocks, everything is on an average down around 20 to 30% from its peak. Even Infosys and TCS, both of them are almost down 20% from its peak. So that's why we believe most of the stocks are available at a very fair or very attractive valuation, and definitely people can start investing at this particular level. Then there is one more point which is very crucial to remember, is the US markets. US markets have seen a significant correction over the past 3 months. Nasdaq has almost corrected. So Nasdaq is an index and that itself has corrected close to around 30%. From 16,000 it has now come to around 11,000, and that itself has corrected close to 30%. And even there I am more or less expecting the markets to take some support and bottom out around 11,000 to 10,000 range. Now coming to the third and the last reason, and that is fear among people. So all these days they were expecting Nifty to hold 16,000, but once that was broken today, we ourselves received a lot of messages saying Nifty is now headed towards 14,000, Nifty is now headed towards 13,000. We really don't know where Nifty is headed, but one thing I can say for certain, at 15,000, Nifty's risk to reward on the upside is going to turn very attractive. So even though we are holding short positions now, so once Nifty moves towards 15,000, we will be converting this 1,000 quantity short position into 1,000 quantity long position, because we are very happy to have Nifty at 15,000. We believe at 15,000 it is fairly valued, and the risk to reward from 15,000 is more towards the higher side rather than the lower side. So these are the reasons why exactly we find Nifty might end up bottoming out around 15,000. Not just that, even if you look at monthly chart, you do see that there is very good support coming in around 15,500. And not just that, if you look at the monthly chart on technicals, even there you do see that there is very good support coming in around 15,000. So now coming or talking about the short run, what we can expect for tomorrow. So again, we are bearish because there was such a big fall in the market today, and there was significant selling and markets failed to hold 16,000, and that's the reason we are bearish. So fundamentally the valuation is getting attractive. It is a very good time to invest, but right now maybe for the short run, for the next 3 to 4 days, we are bearish, and that's the reason we have gone short on call legs also. So for 19th May expiry, we have shorted some calls. And if we see that the market is taking support at 15,500 or 15,800, we'll also end up shorting some puts. And very importantly, what we saw in today's price action is market took support at 15,800. So 15,800 is a very crucial level, because on the weekly chart, Nifty had taken support at 15,800 even previously when we saw a crash in March. Due to the Russia-Ukraine issue, Nifty fell towards 15,800, took support and bounced all the way to 17,500. And today markets have actually closed above 15,800. It respected the support, and that's the reason we believe that if this is going to act as a good support, then this might be a bottom But if tomorrow 15,800 is broken, then we can expect the markets to fall towards 15,500. So this is our market view, what we have broadly. So we are still bearish on the market, but we are sure of one thing: as the market starts to fall more from here, we'll start cutting off our short positions. Right now we are having 1000 quantity of naked Nifty future short, so we'll start cutting off these positions as Nifty starts to fall. So not just this, even if Nifty starts to go above 16,000, we will again there start cutting our Nifty future position, because we are short on Nifty almost from 17,000. And now finally coming to what happened to our trade. So yesterday we were holding certain triangles. Today morning itself I quickly removed those triangles and I started shorting a lot of call option, because right after Nifty broke 16,000 there was huge amount of call writing which happened at 16,000, and even right after Bank Nifty broke 34,000, which is a very good support for Bank Nifty, there was some huge call writing which happened at 34,000. So that more or less convinced that we might not see a huge up move from Nifty or Bank Nifty by end of the day, and that's the reason we started shorting a lot of call option. We were short on very far OTM puts, something like 33,200. Actually, even though we were so far, once when the market actually ended up crashing, we got scared because market came towards 33,200. But overall, today was a very good day, because one, we had short on Nifty futures, and two, we completely ended up shorting a lot of call options: 34,000, 34,100, 200, 300, 400 and 500. So we shorted everything in Bank Nifty. Even in Nifty we ended up shorting 16,100, 16,200 and so on. So overall we ended the day with around 5 lakh gain. We'll be attaching the screenshot of the same, and you can see the call legs which we had shorted. So the thing is, we still have carried certain call shorts, that is 34,000 call short for the next week, and also we have carried 16,000 call short of Nifty next week. So these two are the positions what we are carrying, and I won't be doing a detailed trade review today, because as we had told, there is something really exciting coming up by end of this month, and that's the reason there is some work left to do there, and we'll have to go there. But I'm pretty sure on 30th you'll be having something really exciting to look forward to. So with this we also come to the end of this video. So I have shared the market outlook and also what trades we hold and what we are expecting from the market. So I hope this video was useful and this would have helped you. So do let us know in the comment section how your expiry went and how much you guys ended up making. And with this we also come to the end of this video. If you have liked the content, then do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining.